Hey everyone. Over the last 2 decades, commercial real estate investing has changed significantly. There's been a structural change in market liquidity. Last year, there were more than 56,000 commercial real estate transactions, over $1 million plus, in the United States. Now, that's a significant increase compared to the past. At the peak of the last cycle in 06 and 07, we were doing about 43,000 transactions a year. That makes last year's number about 30% higher. And when you look back longer in history, back to the early 2000s, what we did in 2018 is about triple the average activity level from 2000 to 2003. Another big change in the investment market is mobility of capital. In 2000, 39% of the transactions were in secondary and tertiary markets. But in the first quarter of this year, that share was up to 62%. It's a complete transformation of where money's going and how it's getting there. Commercial investing used to be very local. Today is a much different environment. There's more equity capital. There's a variety of platforms from REITs to equity funds to syndicators to private investors putting capital into real estate. A lot more investors are favoring the stability offered by commercial real estate, especially in the highly volatile financial markets that we're seeing today. There's also better information, more management options, and basically the entire sector is more sophisticated. Now, although there are numerous REITs and institutions actively investing, last year there were almost 5,000 transactions over $20 million. But the landscape is dominated by private capital. Over 80% of the transactions last year were between $1 and $10 million. But these small private investors are more mobile today. They're willing to invest in different markets. They're investing in a wide range of property types, and they're attracted by the yield options and the variety of price points available across the country. The average commercial real estate cap rate in primary markets is about 6%, but there's some advantages to investing in smaller markets. Secondary markets have an average cap rate of 6.7%, and tertiary markets have an average cap rate of 7.3%. So there's some real opportunities to generate a higher yield by looking at some other options outside the core. When you look across the country, a wide menu of options open up. For sellers, the ability to tap into the national pool of buyers is becoming essential to maximizing the return on an asset. And you also have to remember that Canada is a key element in investing in U.S. real estate. Canadian investors comprise over 8% of the U.S. acquisition volume last year. Now, for buyers, accessing the complete menu of investment options, both in terms of markets and property types, offers a compelling range of alternatives. So when you're capitalizing on opportunities in markets outside of where you live, having connections to the right group of people is key. Commercial real estate investment is in a transformation. Last year, nearly $500 billion, $500 billion of commercial real estate traded hands. And a major key to success for investors is connecting with resources that offer both local market expertise as well as a platform to access the entire marketplace.